Good morning, everyone. Thanks for attending this August installment of Certified Webinar to Catch a Fraudster. Super excited to have Diane Tom from the American Land Title Association with us. And with that, we'll give it another 30 seconds or so. We have over 300 attendees and counting. So really excited about what we're going to get into today. We'll just give it another 10 or 15 seconds, let everybody spool in. Dan, can you see my screen okay?
I can.
Perfect. All right, we're going to jump in. For those of you that just joined, welcome. We're going to get started with the To Catch a Fraudster webinar. I'm Tom, one of the co-founders and executive chairman of Certified. I'm a recovering attorney, large title agency owner as well. I'm a member of ALTA, longstanding member of ALTA, serve on a subcommittee relative to the information security group. And again, we're just really excited about the talk that Diane and I are going to enter into in just a minute. But before that, we are going to do some good for some people that need our help. And it really centers around the ALTA Good Deeds Foundation. As I think about good deeds as an ALTA member, think of it as a force multiplier for what members of ALTA are doing in their local communities and having an impact in their local market. So everything from a story I just heard about where a single mom was looking for housing in the Memphis area. She has a child, and through the ALTA Good Deeds supporting a member in a nonprofit down there, she now realized the promise of home ownership, which, if you're not aware, when you think about wealth creation generationally, home ownership is the linchpin that changes the dynamics of an entire family and generations to come if you own the property which you reside under on a daily basis. So that we have, other housing related issues, disaster relief, and you can talk more about this, but for everyone attending today, we are donating $20 to the Good Deeds Foundation. So just by spending a little time with us, thinking about, how maybe in your market, if you're coming alongside and you're doing something great for the community, send an application in to Good Deeds and see if part of that foundation can support and come alongside what you're doing there. So, Diane, what did I miss there? I don't want to misspeak on Good Deeds.
No, thank you. That was amazing. First, let me just thank Certified for hosting me here again today. I'm so excited to be back here. But Tom, just to kind of hear you talk about the Good Deeds Foundation, this warms my heart. As you know, this started during the pandemic, and part of the reason behind it, just to remind some of the folks who may not know this, we saw our members doing amazing things during the pandemic outside of their jobs, right? Helping their community. So we started this sort of social media campaign, send us your good deeds. And then when we recognized we weren't going to be able to be together for ALTA One, we thought, you know what? A lot of our big members spend a lot of money around that. So maybe we can put that money together and help people. And here we are, 2 years, really almost 2 years to the date when we launched this thing. We've raised over $1 million. We've given out almost over $700,000 of that $1 million to, I think the right number, I want to make sure I get it right, to how many nonprofits? To 124 local community nonprofits that our members are already working with. I mean, it's astounding. And that's really all been done sort of organically. And to your point, we've also been very, conscious of the disaster relief efforts. Again, a lot of our members are a part of that in their communities. So most recently, we allowed a grant, or we approved a grant to Vermont for the floods they were having up there. We actually happened to be having a meeting up there when that was happening, and we're aware of, what the impact was right on the ground. So it's been amazing. And I mean, to have all of your participants today be a part of this and building this awareness, it's awesome. So thank you, and to Certified. And
we're also Yeah, we're over 400. So I woke up at 4 in the morning and I came in early and I thought, I want to give back so much money that when I go to the meat counter, because I'm having people over this weekend, I'm going to have to buy ground chuck and not ground sirloin. So I think we've made that today, which is fantastic.
Always a good goal to have. That's a perfect one.
All right. So guys, as this conversation that Diane and I are going to have, and I'll introduce her more formally in just a minute, is meant to be a forum for us in the industry just to talk about things that are top of mind. So I'll be probing Diane about the leadership board, the things that are keeping ALTA up at night, some of the things that they're advancing for the industry and for the betterment of the title and settlement space, and the constituents like us that she and the team represent, but also what's on your minds. Like, we have an open forum here, and Diane has agreed to that we let the conversation really direct from those of you that are on. So with that, I want to formally introduce. She needs no introduction, but for those of you that haven't had the privilege to meet Diane, I'm going to share this screen here. 1 second, Diane. I'm going to clear something out here. Bear with me 1 second there. There it is. So Diane is the CEO of ALTA, the American Land Title Association, representing north of 6,000 active members right now. And that's a massive constituent. I mean, essentially that is the real estate transaction settlement and insurance industry, between underwriters, between agencies, between abstractors. I mean, end to end, it's really all things, like I say, the title, search, examination, settlement, insurance industry. I know firsthand that Diane is kind of a hands in the dirt, very gritty, like incredibly active leader of ALTA. And I've appreciated that open candor, Diane, to say that, yeah, we've been through something here with COVID. We continue to go through something here with the regulatory and the fraud and all the things that we're trying to manage. And this kind of represents, I'm going to put this slide up for a second, and then I'm going to take this down and we're just going to start talking through some of these things. But Dan, maybe a little bit about, what you've enjoyed kind of in the seat at ALTA, right? Like what do you really wake up inspired to do on behalf of the industry? And maybe we could start to tick down in no particular order, but maybe we take one of these and maybe we talk about regulatory first, and then we can work down through market conditions and new tech and threats. But I just want to open it up and maybe have you introduce yourself a little bit wider.
Awesome. I appreciate that, because this slide can be a little daunting. It's not always a happy slide, right? But honestly, I just celebrated my 4 years here at ALTA in July. And I have to say, it has been one of the best professional experiences I've had in my entire career. And I've been at this for 30 years now. And I can say this sort of wholeheartedly, Tom, without even thinking twice, not knowing you were going to give me this opportunity to do this. It's really the people, like the membership. This is unique. The way our industry works together, like you were saying, we've got the underwriters, we've got the agents, everybody competes against each other. But when they come to ALTA, they take off that hat and they put on their ALTA hat and do what's best for the industry. I look at the work that you guys are doing and the value that you bring to our information security committee, but really that happens across the board. It is wild and it's awesome and it's amazing. And I know when we start to talk about these regulatory efforts, we wouldn't be where we are today, and we're in a much better place than we were, say, a few months ago, without everybody stepping up and doing their part, which doesn't always happen, and staying in their lane without a lot of drama. It really was significant. So that's what makes me happy. And honestly, as you know, it's a team effort. So I'm delighted to be able to sit in this chair and speak to you today, but we have so many really outstanding members of our team that just knock it out of the park every day. I can say this again without hesitation, that everybody who's on our team is giving it 150% on a regular basis.
No, I can say that between our interactions with the leadership team, but then also with the the committees that committee I've been able to serve on, and just how active, like everybody, yeah, we're all from different brands and we're for different regions, and you could say, we're all either direct or potential competitors. But I think that the people that really have their eye on the ball in this industry, they're really focused on the buyer, the seller. They're focused on the simple fact that we're all trying to create a smooth and a safe and an insurable closing experience. That's what we're all hired to do, right? And how we get there, yes, it can be messy and it can be hard, and the transactions and the risk and the regulatory all factor in, that journey map that we have. But at the end of the day, I think the companies that have succeeded in this space, and I'm going to be closing in on 19 years here in January, it's just that you have your heart for service and you're focused on, like you say, smooth, secure, insurable transactions. The rest kind of tucks in.
Yeah, and I have to say, Tom, to that point, we have found this, again, on a lot of the different advocacy efforts we've done, the level of trust that people have in our members and what they do is significant. It's really, really impressive, because I think people recognize that our job is really to make sure we protect their largest asset. And it's clear, there's no other. And so that has come through, as we've fought some of these big regulatory battles. It has really helped us sort of really kind of remind people of the value prop that title insurance is.
Yeah, and I think it's more now than ever with, most inventory levels below a month of supply. So we just dipped down into 0.8 here in the western side of Michigan. And we look at stats nationally. We're the last line of defense in so many ways. We have, just on the fraud landscape, is the seller really the seller? Is the buyer's life savings going to come in safely? Is the mortgage going to get paid off? Are the commissions? And, so when you think about just the financial, the dollars and cents side of it. But before we get to that, Dan, let's jump into what has ALTA been working on from a regulatory standpoint. I know a lot of people, oh, God, I'm going to tune out now. I'm going to get coffee, blah, blah, blah. Don't do that, right? Because when we had our discussion leading up to this, you guys have done some significant work relative to attorney opinion letters, some enforcement actions. I'll let you read us in.
Yeah, no, it's been a wild ride, and it was a little over a year ago when, as you may recall, when we spoke last year, the administration had released through the Fannie and Freddie what they call their housing equity plans, and as part of that, both of Fannie Mae and Freddie Mac, who we often refer to as the GSEs, the government-sponsored enterprises, were asked to come up with some ways to lower the costs, right, of their transactions. And so somehow title, and this happens a lot, I'm sure you see this every day in your business, people put the whole closing costs bucket and they call it title. And so, we were sort of targeted as a service that was expensive and that could be done in a more affordable way. And part of it, as you know, our members are required to be regulated state by state. And so the introduction of these attorney opinion letters came into play. And it was, again, about April of last year. Caught us off guard. We didn't anticipate it. There were some, unregulated title alternatives that were out there in the market saying that they could do this for a lower cost. And it turns out that never really materialized. And we still haven't been able to sort of see that. But I will say with the support of our board, who have been amazing, this was an ongoing effort that we were talking to them regularly, and being able to put the resources behind it, we spent significant amount of time in front of the FHFA, which is the Federal Housing Finance Agency, who oversees the GSEs, as well as the in Congress, the Financial Services Committee, and the administration, as well as the CFPB in some areas, not particularly on this issue. And we spent a lot of time educating folks on both sides of the aisle, what the challenges were behind this. And ultimately that, this was a predatory product that they were providing a first-time home buyer with less coverage, right? particularly the ones who need it the most, right?
Yeah.
It affects their audience. So the AOLs was the biggest challenge at that time, but since you and I spoke last year, we also found out that Fannie Mae, Freddie Mac was not doing it, but Fannie Mae was also considering what they called a title waiver program. And this would be pretty much Fannie Mae self-insuring. So they were going to waive title because currently, it's part of their guidance that they require it. And I'm happy to share some good news that we have on how we want to turn that into legislation where it would be something that they would have to do. But currently there was in their selling guide that there was guidance that the insurance should be there. But again, Fannie Mae felt like they could do it better, quicker, and for less money by waiving the title insurance requirement on certain GSE loans for first-time home buyers from a certain segment. Well, the pilot program, we'd never really seen it. All we did was hear about it from our members who were really concerned about it. They knew that they were out there talking to these big lenders and others. So again, we had to shift from focusing on the AOLs to this title waiver program, which really started in January of this year. And we were able to identify and the support behind that. One, the pilot program they were planning to move forward with didn't even support the audience that they were trying to reach. So it was really in the refi area, which of course is not the first time home buyer, which is
No, not at all. Right.
So there were so many of these complexities, and it was I know folks from our industry understand this, but then having to convey that to our audience, and we were very fortunate. There were a bunch of things that broke in our way. I would say, the Congress being taken over by the Republicans in January was huge for us. We had a significant amount of resources that we have put behind through TIPAC. And again, thank you to many of you who are participating today who have been a part of that. That was so critical. Being able to get our membership in mass on Capitol Hill in May, again, talking about this one issue and the importance of it was significant. Again, we had so many people turn out. We had so much feedback. Again, on both sides of the aisle, we were able to sort of educate folks and we had hearings that called the FHFA director up to the Capitol Hill to really explain what it was they were trying to accomplish. And for the members of Congress on, again, both sides of the aisle, which I think is what was so critical about this, say how concerned they were that this, that this was the Fannie Mae in this particular case was going outside of their charter. We all remember what happened back in 2008 and 2009. And to, think that this is something that they can do unregulated, and not have ensure, the state regulatory effort around it was significant. So, I received a call. It was actually it was a week ago Monday from the CEO of Fannie Mae to let us know that they were backing off on it. They heard us loud and clear. They recognized that it wasn't something that was actually going to even be cost effective. That was sort of the irony of this whole thing. So I think the most important thing that I can say from that we all learned was really, it is a huge win. Thank you, Michelle. But it really was significant because everybody stepped up. As I said, everybody knew what their role was. Folks showed up for ALTA 1. Folks got to work at the state level. The TAN members, the education piece of it happened in TIPAC. And that's what, again, makes our organization so unique. A lot of times you'll have people having different, goals or, people going off on their own, having their own efforts underway. That was not the case at all. I mean, we had some people who had, different, opinions, but we worked it out as a team and the board, would come to decisions and we were able to put significant resources behind this effort and to be where we are today. So we are thrilled that the title waiver program is not moving forward and that's been halted. And I sent a letter to Director Thompson, the head of the FHFA last Friday to thank her for giving us the opportunity to be heard and to be a big part of that. But we have a lot more work to do, as you know, Tom. We originally started out on the AOLs and we're back to that right now. And I'm happy to talk a little bit about that unless you want me to stop for a moment.
We could end it here. It seems like you saved the industry. You rallied the troops. Like, I think this is a wrap.
Right. I think the most important thing I want to share because I have received a lot of great feedback from folks. And again, it was a team effort across the board, particularly our advocacy team under Chris Morton's leadership. Emily Tryon and Kevin have been working both sides of the house. All of our members have been doing it. But back on the AOL piece, this is significant. We haven't talked about this, but we will be talking about this more because we wanted to make sure people understood the two different.
So Diane, I want to lay a foundation. That is attorney opinion letter. I'll say it in lay terms and you can back this up. And guys, if you have a question, put it in the Q&A session. So if we want to spend a little more time on this concept of AOL and how this is now evolving, tee up the questions in the Q&A. I have a panel open on another screen and we'll address them. As I understand the attorney opinion letter, it was meant to say, hey, rather than having an insured product, we'll have the due diligence around the public records. We'll have an opinion relative to, call it, status of title. But that was it. Where it left me thinking as my legal hat was put on, well, what's the liquidity? What's the backstop? What's the guarantee, years down the road? Because guys, yes, you might have a post-closing issue. I didn't prorate this, or I missed the HOA, or, the assessment, or the transfer affidavit, whatever, right? You're going to know that in a few weeks. But a lot of title claims have, they have an infinite tail to them. Remember, it's insurance from the closing date back, decades. So where was that guarantee when Bob, the attorney, PLLC, who's just cranking out these opinion letters using, whoever, internal or outside resources, where's Bob, the attorney, 5 years from now? And what's the liquidity? And I didn't see a requirement. I didn't see a bonding requirement. I didn't see an additional assured requirement. I didn't see liquidity. I was left with, well, that's an opinion of title. That's it.
Oh, where we started before title insurance existed, right? Which is why we are who we are. And to add to that, the whole purpose of this was really to bring down costs. And there's nothing that shows that that's going to be less, and they're going to get less coverage. Again. No,
because as I think about the insurance, it's easy. It might be easy for a regulator or maybe somebody that's not informed like they should be to say, well, title insurance runs on a claim ratio that is lower than other forms of insurance. Well, sure, because the whole point is we spend all this time diligencing and de-risking everything possible so that when we get to the table, the idea is we did the work and then the insurance covers everything that we did. Like it's kind of inverted a little bit, right? In the sense of what it actually takes to insure marketable title between buyer or seller, or a first lien position for a lender. And I think that's probably easily overlooked.
Absolutely. That was an argument, and it was an education that we did. We were proud of those low numbers, right? Because we've done our work. And I will say one thing that has come out of this overall effort, we've done the really strong work on Capitol Hill, and our voices were heard, and we were able to sort of, influence this public policy effort. But we've also recognized that we need to do a better job of putting our research out on that type of effort, what we call the claims and losses study. So Kelly Romeo, who I know many of you have worked with, and I know you work closely with her, Tom, has been spearheading our research efforts. And we should, by October, be able to have sort of our first top line of, what those claims data and losses look like. It's something that we can now share, that's ongoing, that's accurate, up to speed. So we recognize that having that data and being able to, share that with the different parties who are questioning that will be really valuable. So we've been able to, in a really short time, stand up this research effort, which I think is going to really help us. We're going to do an economic contribution report is underway. That shows all of the different efforts that our industry does in a lot of our members' backyards, and sort of, the role that we play from that component. And as you know, we have the cyber crime survey, which is huge, that we can, we're going to talk about that later, obviously. And then, of course, just the operational benchmarking survey. So we have all of these research initiatives that I know will be really valuable. And we could have used them when we got into this first fight. Now we recognize the importance of that. so many. But the other really important thing that I wanted to share with all of your attendees today and with you is that in addition to hearing from Fannie Mae last week that they were halting the title waiver program, Senator Kennedy from Louisiana, who we've been working with, introduced legislation called the Property Protection Act. And this legislation would require all loans by the GSE to have state-regulated title insurance. So this is huge, right? We've got a lot, we're working very closely. This is on the Senate side. When they come back in after Labor Day, we know we have someone that we've been working with on the House side who's going to introduce this legislation on that side. We're building the bipartisan approach to this. And this is it, right? This will put the stake in the ground, right? But this will say, there's no more providing these unregulated title insurance products that people have no idea. The AOLs, the lenders don't want to take that risk, right? And
No.
so, yeah, so here, this is something that we feel, it's not going to happen as quickly as the title waiver program went away, but it shifted us to be in the proactive. So now we're on offense and we're putting this stake in the ground, and we've got some really great supporters to do this, and we're not going to lose the momentum that we have right now. So it's been exciting because it's been amazing to see everybody come together and work on this. And, I know you and I talked a little bit about that slide with the market conditions going on. What we have seen at ALTA this year, as people's work has contracted and they're focusing on other things, is engagement like we've never had before. We have more people participating in our committee structures. We have more people helping out on this effort. And I will say, I have received a ton of feedback from folks, and we do have. So yes, we've halted the title waiver program, and that's a huge win for us as an industry. But we do have this big fight on AOL, so we want to keep the pedal to the metal because we got a lot of work. So thank you for letting me share that, because I think it really is.
No, thank you. I think I speak for everyone. Thank you. I love the fact that there was. I'm just going to call it, and I'm not saying it's a bad thing. It was a shot over the bow, maybe a little bit of wake up call to say, oh, let's now that this is being discussed, we'd love to tell you more about what we're doing and the value that we provide consumers, be it individuals or entities across the country, as they buy, sell, and finance real estate. It's fantastic.
Yeah, and I have to say, so many of our members who have participated on the board and others, they are, what we talked about before, so articulate and honest and straightforward about what they do, that's really what sold it. When we were able to put our members in front of those members during during our advocacy summit and our meetings with the regulators on a regular basis, they really felt that. They understood it. And of course, all of them have bought homes or have been refinancing and doing it. So they really understand our value. And to be, for us to be able to show that and to demonstrate it, and we need to continue to do that. As you know, we started, when I stepped into this role, we started an effort called Tell Our Story. And it was really to educate. So we have significantly upped that effort to be a lot more specific around these regulatory efforts, but I think it has helped us lay the groundwork to be able to, have this win that we are today.
Yeah, I think an interesting stat too would be not only just the claim side of it, but how many issues did we clear as an industry on an annual basis?
Right.
Like how many breaks in the chain? How many grantor grantee? Like how many legal descriptions? How many foreclosures were avoided? Like there's just that's what we see day to day in our curative departments on the title side is we're working every single day to just get back to center, get the thing back on the rail, because somewhere along the way, somebody passed away, somebody got divorced, there's an intervening, missed payment of taxes and a foreclosure. I mean, all those things challenge home ownership, challenge the value of property.
Right.
So
well,
that's
and it takes, for those things to show. You were talking about at the tail. Sometimes it takes some time before we actually know what those issues are.
right. Diane, I want to mention we hit 500, so this is now a 5-figure donation to the good deeds. So thank you, everyone. That is just cranking the attendee numbers up here. It's fantastic. Fantastic.
That engagement
right.
talked about, right?
Yeah, let's talk about market conditions. So again, I tend to be somewhat of a simple thinker. We just went through something the last 36 months, from what I call just the flurry or the tsunami of COVID to a fiscal policy that really was myopic in its focus, and how resilient the industry has been. I know we've all had to make tough changes and decisions, going from the top of fifth gear to a crawling first gear in a matter of a 60-day cycle about a year ago now. I mean, this is where it really started to set in. 75 basis points after 75 basis points, you get to that third one, and we saw kind of a spooking effect, like there was just too much change or shock in the water. And on the back side of that, what we're seeing is a resiliency that home ownership still is a primary goal and objective of new household formation, of transitional housing, because of age or marital status or whatever, jobs. But what is your office, as you think about market conditions, and you sit at a much higher level than all of us on the call here? How do you think about it? What are you hearing?
Yeah, like we this time last year, this is when we do our planning for the next year, and come ALTA 1 is when we sort of hit the ground running. And it was very clear, we heard from our members that, I think the language they used, we fell off a cliff, right, in August. Things just sort of really halted dramatically. And so we really saw our role as leaning in, being able to educate people on what kind of resources we can have. Like, we're going to get you guys through this. And as you know, there are a significant amount. And to your point, even just the engagement part, people sharing their stories. One of the really good bellwether for me personally is our large agents meet regularly. And we had one of our meetings early January. And at that point, people really, it's one of the most, for me, from an industry perspective, people are very honest and open about what's happening in their businesses and how they're dealing with it, and they're sharing ideas with each other. And of course, the fraud piece has also significantly increased, right? Because when the markets tighten, the fraudsters come out, right? There's more of them, right? Everywhere. So there were a lot of these different issues. And one of the things that, and again, these are the large agents, so they've been through some of these cycles, many of them have, but that's obviously, there's a significant part of our membership who haven't, right? There's some that this is the first time.
Yeah, so first cycle. Yeah.
Yeah, exactly. And that's scary, right? So at this point, this was January, people were still trying to not lay people off as much as they would have. They want to, obviously talent is so important, right? Developing that through the pandemic and keeping that. And so there were a lot of creative ways that people were sort of cutting hours back, or, a couple of things we saw, which was really creative, innovative, was allowing people to do community service, one day a week, and other ways that they could keep them engaged. Looking, one of the things, as we did on the best practices, looking at how they're sort of adapting to the new ones that were rolled out in last May. And I know we'll talk about that a little bit and how that affects wire fraud. But so we saw, like I said, people had more time because, again, during the pandemic, nobody could come up for air. And they really got more engaged on the industry-wide issues that were important to them, whether it was the operations of how they're working, within their organization, or on the larger regulatory efforts that they may or may not have had the time to be able to be involved with. So it was really, and of course on the fraud stuff that we're going to talk about, I think our committees were more active than ever. And Jack Radican, our current president, will say he was getting weekly requests for to review folks who wanted to join us, which we never saw that before. It was really neat. I know. So, but in some instances could have been the opposite. It became people, put their head down and got to work, and they're working harder.
So that gets us to today. Let's go into your looking glass out, 12 to 18 months. How does that start to shape in your mind?
Yeah, I'm like everybody else, Tom, listening every day. We've got the Fed making decisions, and I'm a Bloomberg junkie. I listen to those guys, and you can get the the economists from NAR saying one thing and VA saying something else, right? Like, it's this constant. But I do feel like consistently, and I sense it just from the way that we're interacting with our members and what people are doing. We will see, we will know, and as our dues come in, because people pay their dues based on what they made the year before, for the most part. So we have a real, we'll have in like October, November, some real data that we can sort of see, oh, okay. But, I am as optimistic as others that maybe by second quarter 2024, things will start to shift and get back. I know we're at the 7% interest rates right now. Hopefully we'll get somewhere. I was talking to someone the other day on the mortgage banker side. They're hoping 4 to 6, right? Maybe by this time next year for sure, which would be awesome. And to your point, it's really a supply issue, right? It's not so much that people aren't going to want to buy. And we've got the people are rate locked, right? We have so many people who aren't going anywhere.
Yeah.
So it's an issue. It's a supply issue.
Yeah, I think that's right. It's just adding so much more carry cost between property tax resetting because of uncapping in states where there is, like Michigan has a proposal that caps it until there's a transfer that's not exempt. And then just we're essentially double on average. We're sitting here this time double than what we were 24 months ago, or maybe even 20 months or 30 months ago. So I think that piece of it is very interesting. I think the election will have some triggering effect. It's interesting that we're going into kind of that cycle. One of the things that we're really thinking about on the title side is, as the refis come back, now's the time to lay the footing down for a really low touch, I'll say automated, but streamlined process, because those are going to come in. And it's going to be like the early 2000s. I think we're going to have a ratchet effect where we'll see the property addressed multiple times as it works its way back down into the 5s. I've been talking to some of the top lenders in our area, and they're saying it's going to take about 3/4 or a point to justify that, that transaction cycle for a refinance. That's going to have to do with, the actual mortgage principal balance, but we're setting up nice for that. I'm going to catch you off guard with a question here, Diane. What is your opinion on the consolidation and the M&A activity that has taken place over the last 24 months? So I'll just be candid. My phone was blowing up every week. Private equity, underwriters, right? I mean, there was just this almost frothy level interest that all of a sudden everybody's paying attention to the earnings reports from the underwriters. They look at the agency base. They may be seeing a new either vertical or an ancillary vertical because they're already in the insurance space to cross-sell. Do you see it as a good thing, a bad thing? Do you not have an opinion?
On all those things, Tom, I know this is a very sort of like political response. There's good and bad, right?
Oh, it's okay.
Yeah, because it's really true. I think the fact that I will tell you, when the AOLs were announced and others, people, we heard from, that industry a lot. They were really nervous because, to your point, they were looking at us and all of a sudden they're like, what is this? Is this, and the words that we would hear regularly was is this an existential threat to the industry, right? Is this something that will change it, forever? And it could have, right? So, again, more important that we do stay focused on, making sure people understand our value, who we are, and how we do it, because that was really significant. But I do think, having we've seen that a lot too. We actually restructured our business model because of what was happening in the industry, because, it hasn't really been looked at in 15 years. So there's been significant change, right? In what's happening on both sides of the aisle, right? Both on the underwriters and on the agent side, right? And on affiliated businesses, there's just a lot happening. And we feel like our role is to really be able to serve where the industry is today. We're like looking around the corners, to your point, like where are we going to be in 18 months, and what kind of resources should we be providing our members to be offering their businesses the way they want to, reflect the regulatory environment that they're living in, and to be able to sort of keep our members educated and up to speed on, how they're going. I mean, so that's really been, it's been a challenge. I get to participate in, I was just looking at, recently I was in a luncheon, and it was the CEOs from the mortgage bankers. We had the CEO of the National the Realtors, Bob Goldberg was there, who just announced he's stepping down. We had the NAO, the folks who were the office folks. Anyway, so what was really interesting, because the big discussion at that point was the commercial, what kind of things could we be doing, and they're actually, some of these larger organizations are proposing to the administration that there would be programs where they could maybe refit some of these offices. Because, that's going to be another big thing, commercial piece of it, right? We haven't really seen that. I keep getting these updates on my phone about the banks, right? The next level of what's going to happen with these banks. So I don't think we're out of this yet. I think there's a lot more to come that we need to be prepared for. And I think we learned from SVB Bank and others, like, we got to make sure that we're doing, that we know, that our members are covered. And that was a big part of, when we did update our current pillars, right, for best practices, that we should be doing this more regularly, because I think this is, these were introduced in 2013, and it was 10 years, right? Think about what has happened, right? And that's
a totally different world. The asset hasn't changed, but boy, a different world in a lot of respects.
Right, the how. And now, again, I go back to when I stepped into this role, people were nervous, like, what's technology going to do? How is it going to, we realized technology is good, right? That it's how we use it. And we're always going to need to, be informed and keep up to speed on what's happening. And I think our value has become more recognized through the pandemic. That was, we played a key role in sort of elevating, make sure these deals got done. I think that helped us, but just like everything else, it's like, what have you done for me lately? So here we were last year, right, having to defend our costs and what we do and the value of that. So I think, the challenge for all of us is not resting on our laurels, which I don't think anyone in our industry does that. But also, I think building our partnerships and making sure that, the real, like the realtors and the mortgage bankers who we've been working very closely with. We've had both come participate and speak at our most recent board meetings, their senior leadership. And I think that's been really important. I try to, stay in touch with them regularly to share what's happening on our end, because, a lot of times we have very similar regulatory threats that we're dealing with and partnering together. And what we talked about earlier, the grant that we gave to Convergence, that's through an effort with the NBA, and we partnered with them on that. They have a bunch of cities where they've identified where they're providing affordable housing. So we're really trying to, work at from all levels, which I think is where we have to be today. Really no way.
There's so many things, because I think about affordability issues aren't going to go away anytime soon. We're over $200 on average a foot for an existing home. We're approaching, mid threes or maybe $4 for new home, and that's just construction costs. Rent continues to. So there's this weirdness about the industry as it relates to first-time home ownership. The way we see that presenting itself is in creative household formations. So non-traditional by any measure going back a few decades, but more commonplace now to have people that, aren't married, or they're not even really related, or it's really interesting. Housing is, it's causing disruption right under our nose. And if you just kind of ask a few questions about, okay, what's the relationship of these parties, or let me think, you'll start to get glimmers of how people are rethinking housing in and of itself.
Right, particularly as on the coast, right?
Right.
It's really a lot happening.
All right, let's jump into our third topic, and you kind of led into it, and that's technology. And to your point, it was several years ago that blockchain was going to replace the entire industry, and all these bots are going to take over everything. And the way that we look at technology is, when you have a strong culture, you have very strong and well-defined roles and standard operating procedures. Technology can be an amazing force multiplier. But if you come in and you're like, well, I just need tech to solve problems that I haven't really identified, and I don't know how to really explain it, I certainly don't know how to train around it. I think there's a little bit of a mismatch or a misnomer that, somehow it just sprinkles dust and it magically makes things happen. If we think about technology and really artificial intelligence, you had asked me a question earlier, like how does AI play in, the landscape in our industry? I think used for good, it's phenomenal. I mean, it's an amazingly efficient tool for drafting and creative thought, things like that. We're already seeing signs when you hear, and this just broke a couple of weeks ago, Fraud GPT and Worm GPT, that you have bad actors that as quickly as we get our hands on a tool that is, something that could be a force for good, they manipulate that and it's a force for something destructive. How it's presenting in social engineering, and again, guys, like wire fraud is just a monetization of social engineering or business email compromise, is being able to use artificial intelligence for voice filtering, for callbacks, to draft emails, what they call the attack email, that just gets through a filter where normally you wouldn't get through it. It was funny, I think on Sunday, I got a Nigerian print scam email. Like you think, well, who in the world gets those? Yeah, who in the world gets those anymore, right?
Yeah.
But this is not that. Like this is so active, this technology is so advanced that it will continue to look better and better and be more convincing. And I guess I'd like to get into your headspace a little bit, Diane, as well as kind of the ALTA leadership is, is that acute? Is it more an existential threat that we're going to have to continue to manage? Like what conversations are you having around tech used for bad versus tech used for good?
Right. Yeah. Well, as you know, at ALTA One, that'll be a big topic. And I'll just sort of take a moment here to remind people, October 10th through 13th, we're going to be at the Broadmoor. If you haven't signed up, hurry up, because I know the room blocks have, been filled, and we're going to have we talked about, a little bit about our industry and what's going on in the economy. I think most people have saved all of their resources to go to ALTA One. We didn't see the same type of turnout at some other events we would have had this year because everyone said, you know what, we're going to ALTA One. So yeah, we will have an opportunity to talk about that in break. Because like everybody else, we're doing our best to make sure that it's utilized for good. And I think what you were talking about, and that's a big part of our best practices, right? The undertaking of making sure people the new pillars that we put in place, particularly around wire fraud, but there's a whole bunch of things to make sure that folks have their operations in place and are being able to use that way that they can. And to your point, yeah, look what the fraudsters have done in a short time, during the pandemic, right? I know we touched a little bit on this, but one of the things that we've heard over and over again when I'm out at these meetings with our agents is the seller impersonation fraud. Yeah. That's, significant. And to your point, the level of sophistication on that is really, because people just don't realize it. I actually saw something just earlier this week. I think it was outside of New York. Someone had bought a piece of property. It was a family. They were holding on to it. And they got a call from one of their family members who happened to drive by, and there was a new house being built on it. And it turned out the realtor as well as the builder had no idea. And of course, the person who owned it was, taking it out on them. So there's this whole process, right, of everybody trying to figure out what's happening. So this is real, and the numbers are significant. And so I think the most important thing we could do is learn how to use AI and these technologies for good, like what you guys are doing, certified, right?
Yeah, no, you can. I mean, for those of you that may not be aware of seller impersonation fraud, it's the fastest growing fraud vector that federal law enforcement, that us, Diane, I think you'd agree, has kind of come out of not nowhere, but we saw early signs of it about 18 months ago in Florida. It was the Fort Myers area. It went quiet, and then it just came on full throttle. So essentially, they just troll through the county register of deeds. They look at words like vacant or unimproved. They identify here's a parcel without a structure on it. By definition, you're not getting mail there, you're getting mail somewhere else. So they look up the taxpayer information. They create an identity document, a driver's license or a passport that I'm telling you, we have 18 active cases in just the greater Grand Rapids area in the last 12 weeks. So this is an epidemic level, at least in our markets. We've heard of them in nearly every other market. So they impersonate the seller with an absolute phenomenal looking document. They get a listing agent, they list it, typically a little bit below market because they're vacant. There are a lot of cash buyers. They ask for a mail away closing. They'll say, oh, I'll close at my attorney's office. I got this, and I'll mail you the documents back. And if the title company's smart, they say, no, we got to control that. We'll send a notary, and you have a money mule with all the credentials of, money mule's face is on the ID. Everything else checks out. You get a mail away package in. You QC it, you record, you disperse, and you have a $1.3 million home being built months later, just outside of New York. I mean, that's in Florida. I could go on. And I think the challenge that we have there is we're learning, and I'm learning personally, about how easy it is to either get your hands on an identity document that's state issued through some holes in state security, through Secretary of States and DMVs, but also for $200 and a little bit of information on somebody, there's places on the dark web where you can have these created. And I'm just saying from the experience here, I mean, if you're not educating your real estate partners and your referral partners about the difference between validating an identity document and confirming the identity of an individual, you're going to miss it, because now we're in a whole different world. So you have to assume a zero trust environment for any vacant land right now. But now we're already seeing a move in to entity held properties, to trusts, to your corporations, to your holding companies, because how easy it is at Diane to say, yeah, I'm a member of Acme Holding, and here's my resolution, and here's my driver's license. Let's get started on this, commercial property or who knows what. And somebody mentioned it's not a title defect. So again, as it comes in, it is a hot mess. I mean, this what's going on in New York, and the more than dozen others. Yeah, it's like I got a bona fide purchaser, I've got a victim as a seller, the title company's caught in the middle. Who ends up with the property and who writes the check for the proceeds? Because it's just social engineering. It's still wire fraud at the end of the day. It's not a title defect.
Right. No, that's exactly right. And so we have put together a flyer free at ALTA.org to really, you can share this with your team, with other realtors, anybody who within your world, and really the red flags, what to look for, right? Because a lot of times these guys are operating through email. You're not getting to meet them face to face. There's no sort of that kind of, and what kind of precautions that people take. So I think it's really important that, again, it's the awareness piece right now, because these things are happening very quickly. I think the sooner we can get out in front of it, shine a light on it, will help people to know what to look for.
Yeah, we've seen somewhere they have used AI to mimic the voice of the actual owner, so that when they're having this conversation, they're kind of typing in the words, but it's being transcribed over a telephonic line, where it sounds like you're talking to somebody. We had one that was so sophisticated here. It was a property on Lake Michigan. They noticed that the property was recently transferred into a trust, so they went through, actually hired an attorney to prop up this daughter as the beneficiary of the trust and get a certificate of trust existence all the way down the line through funding. I mean, so it's not going to come in like you think it may come in if you haven't seen one of these. So this is an opportunity. I'll just speak to the leaders on the call today. If you haven't educated your teams and given them the birth, if you will, to ask questions and slow the gear down, especially as it relates to vacant land, there's going to be an unfortunate event that will likely occur, because they're just so focused on this.
Yeah, no, I think really important is slowing it down and asking those right questions. Something feels, trust your instincts. If it doesn't feel right, probably not.
Yeah, and go back to there were stories. We had a group on not last month, but the month before, and he turned down a transaction because he said, look, man, this just doesn't smell right. So the agent took it over to another title company in Florida. They closed it, and it was flat out fraud. Like, you're just asking for it, All right, a hot topic is payments. So real-time payments, the clearinghouse. How do you think about, Diane, what are you excited about? And maybe what are you, I'm gonna use the word terrified because I'm gonna say what I'm terrified about, but I'm excited and terrified about the new payment rail. The first payment rail that's been developed in decades is the real-time payment rail. And for those of you that aren't aware of it, it is think of it as a self-checkout express lane that the Federal Reserve has created called FedNow, where you initiate from a bank, the receiving bank has a signal that says, hey, money is going from here to your institution, and it has to settle in 120 seconds or less. Fully settle, non-recallable. So the promise of this that I'm excited about for the industry is I could enable a closer. I could have a buyer in front of me in real time. I could enable a closer in real time. Somebody could open up. It's almost like a Venmo, Diane. If I Venmoed you $5 right now, or the ALTA you'd see that in a matter of 5 seconds or less, right? Well, this is, inside of 2 minutes, and it has a large rail to it. So it has the promise of instant payment, fully secure, fully transparent, in real time. The challenge is, and I've been on the peripheral of this, it does not provide payment credential or account information back, so that if we still have a fraudster, we're not doing it in real time, and now we're sending an RTP, or if they receive a wire and they have RTP capability out of that mule account, it's going to be harder to reclaim funds. That's the edge of it that, unfortunately, just like AI, they're going to use to abscond with money that we're not going to be able to recover like we have the benefit of right now through the Federal Reserve. So I'm going to stop talking now, Diane, and I'm going to hand this over to you on instant payments.
Amazing job sort of laying out there what's happening. And, one of the things that we did early this year, and it's also on our way, and I neglected to mention this when I talked about our research, is the board approved for us to do a significant piece of research. We hired a third-party group that's being led by Elizabeth Bloss on our team to look at what the industry is currently doing, like what all the options are, and what each of these things, to your point, will provide. So, and that's something we'll be able to provide to our membership again, if not before, by ALTA 1. Because we know how valuable that is for everyone to talk about, to understand how they can make it work for themselves. One of the discussions we had at our most recent large agents was everything, to your point, like down to how do you make this work? Are they going to have people working 24/7, right? If there are these real-time payments, it was those kinds of things. Like, okay, so now we have this. How do we integrate it into how we work? Like, how does that, do you only make, there were so many questions around what that looks like. And again, I think eventually it could be a really valuable thing. And obviously the goal would be for it to lower wire fraud, right? Not increase it. But to your point, we don't want to give them, sometimes there are these unintended consequences that take place, right? And that's the last thing we want to. So we are going to be able to provide all of our members sort of looking at all of the different deals that are out there, sort of understand what the benefits are and what the downsides are on all of these different ones that are being proposed, and some that are currently being used.
Yeah, I mean, if you haven't, for those of you in attendance, if you haven't asked the question of your financial institution, it's time to get read into real-time payments. So they have an election to make. They can be a receiver of what's called RTP, or they can be a sender and a receiver. Most of them will elect to be a receiver, but it's going to take quite a bit of programming, and they have kind of a run out of the guidance that the Federal Reserve says to be a sender. Your large banks have been in pilot with this for a while now between themselves, but I think it's important to understand, to your point, Diane, what does this new payment stream mean? And how do we think about adjusting or getting ahead of it so that consumer preference, we can still manage the consumer preference on this new payment rail. The last thing, I know we're a minute over time, is enforcement, consumer protection. You know, we're hearing about some of the states being a little bit more inquisitive of the title space. I'm addressing the NAIC, the National Association of Insurance Commissioners, in a couple of days around seller impersonation. I'm giving them a state of the union of what we're seeing as far as the wire fraud threats. But anything on that we should be aware of that you're hearing about?
Yeah, well, again, our team, like you, are working on traps. You know, there's all types of issues, heirs property. You know, we've been working very closely with the state attorney generals, not only to make them aware of the AOLs and some of the other issues, but also proactively, you know, working with them to make sure they're aware of all of these different efforts that are underway that could result in a lot of, you know, their constituents being adversely affected. So we've really been, I think, from the state level, working very closely with the state LTAs, is helping sort of amplify what those challenges are. Because as you know, oftentimes it starts at the states and then it comes back to Washington, right? Remote online notarization is a good, you know, example of that. We have a lot of other initiatives that are happening. And oftentimes we don't want something coming out of the state to, you know, get the sort of ground. So that's something that's sort of ongoing. But I would say right now we've been very proactive on a lot of, again, entraps and some of these really challenging arrangements that are really not good for anybody who's involved. And so partnering with the states, and again, on the AOLs and the NIC is a really, I know Steve Gottheim, our general counsel, is also going to be there. You're probably going to see each other while you're out there, and he's going to keep educating them on these alternative title regulatory, you know, alternatives, which, you know, I know the NAIC has been very open to hearing our concerns and share them. So the more we can help them understand how serious this is and what it really will, how it will adversely affect current homeowners and potential homeowners, I think that's the most important thing.
Yeah, and I'll be saying the same thing. Yes, there's a problem. There's problems all around, but as an industry, just like today, I mean, we're educating, we're creating awareness, and there are ways to manage this thing down to a much more secure state. So,
without bringing in these irresponsible, really works, right? We've seen that. We don't want to relive 2000.
No.
Right.
Well, Diane, thank you so much. I know I speak for everybody on not only what you're doing, the things that you, the team, and, you know, all the volunteers that are really, like you say, I like the term, just leaning in to not only preserve, but just to make things better, to make things more transparent, to make things better as you're managing so many different themes throughout, you know, the industry. And thanks for everyone for attending. And we're not only doing some good today, but I've truly enjoyed this conversation.
Hey, Tom, thank you for this platform. I really do love to be able to share with folks what's happening because there is so much going on. The good news is, I mean, people are recognizing our value and understanding who we are. So as these challenges come in, it gives us an opportunity to do that. And I appreciate folks like you who are stepping up every day, no matter what the issues are. It's really been, you know, there's so many folks like you, and we wouldn't be where we are as an industry without it. So I think we just have to, it's a marathon, not a sprint, right? This is only going to continue. So we have to fuel ourselves and stay positive because I think, you know, I think all of us can feel good about what we do every day. And that's
100%. Yeah. Well, Diane, thank you. And thanks for everyone. And we'll sign off on this. So take care. Have a great rest of the day.
Bye.